Good afternoon, everybody. Here we are, day 2 afternoon. It's gone by very fast. We have a great panel for you today talking about the future growth opportunities for Bitcoin treasuries. And an awesome panel here. Andrew Hohns from Battery Finance, Mason Foard from Méliuz, Peter Duan from Bull Standard, Bitcoin. Let's get into it. Maybe Andrew, we'll start with brief introductions, and you can talk a little bit about yourself and Battery.
I'm very happy to be here today in Abu Dhabi. At Battery, we have developed a series of financing structures that enable people to realize their ambitions with their Bitcoin. Because right now, if you're going to borrow against your Bitcoin, in large part, you have to use mark-to-market financing facilities at high interest rates. And we think that it's much more sensible to combine Bitcoin with traditionally financeable assets, provide financing structures that don't have mark-to-market elements at lower interest rates, all of which is powered by sharing in the performance of the Bitcoin over time. So it's nice to be here. My background is structured credit, but I feel like this is a very good venue for this because of the traditions of Islamic finance.
Good afternoon, everyone. My name is Mason Foard. I'm the Director of Bitcoin Strategy at Méliuz. Méliuz was the first public company in Brazil and all of Latin America to adopt a Bitcoin strategy. Méliuz has our Bitcoin holdings and as well as our operating company, which is a app that is a cashback service and financial services as well. We have 46 million users in Brazil, and we are growing. We are a profitable business, and we are sweeping the cash flow into Bitcoin.
Good afternoon, everyone. My name is Peter Duan. I have a traditional 14-year traditional finance experience. Started off at Cantor Fitzgerald commercial mortgage-backed division. Also had experience over in financial products, packaging financial products to be wholesaled through financial advisors. Also had experience doing investor relations at a S&P 500 company. And most recently, I was a wealth advisor. So as you can tell from that background, it's a nice depth and breadth across all areas of traditional finance, ranging from credit to equity to commercial real estate. So I had a nice overview of the whole traditional finance space. And in the last year, I've been very involved in the Bitcoin Treasury space. And yeah, just been an observer of what all these gentlemen do up here.
So we're talking about growth opportunities today for Bitcoin, and I think that the Bitcoin treasury companies, I think the growth to date has come from social media, right? In terms of communication and getting your thesis, your company out there vis-a-vis the internet. Maybe starting with you, Peter. I guess what has been successful to date in terms of communication strategies and social media, and how important is that in terms of communicating what you're doing and what your value add is as a Bitcoin treasury company?
That's a great question. So everybody knows that the traditional finance world is barely getting the head around Bitcoin. So if you're a Bitcoin treasury company, most likely your first investors are going to be fellow Bitcoiners, retail Bitcoiners, who you have to effectively persuade to sell either the Bitcoin or the existing MSTR shares to buy your new Bitcoin treasury company. So the only way you can do that is if you can accurately, convey your value add, because it is a much, higher risk but higher reward investment. So that's why you need to consistently invest in having a social media presence and communicating to your shareholders what is your value proposition and how you're different from the rest of the Bitcoin treasury industry.
Yeah, I definitely agree with that. I think the smaller your market cap is, the more important social media outreach is. And I think that was definitely the case for strategy early on. I was actually a founder of a very large Twitter community called Irresponsibly Long MSTR, which kind of has become infamous for being a bunch of crybaby paper hands. But that community grew exponentially, as 38,000 members in it, and the retail base kind of is out there spreading the message and explaining to people how the strategy works and how it continues. Because if you are a person who has never seen a Bitcoin treasury or has never doesn't know anything about it, it's a really foreign idea, and having that retail base to go out there and defend you online, I think is critically important.
And I think, Andrew, when we had our call last week about this, working with institutional capital, the means of communication is different, right? Maybe explain from the groups of people that you speak with related to battery finance and even just Bitcoin education, just kind of where that comes from. Because I think if you ask your typical endowment, foundation, pension, very few of them are on Twitter, X, any other social media. So I guess, how do we as a community reach the institutional investor?
Well, I think that we have to do the hard work of breaking out of the circles that are very comfortable, which are also very interesting. I mean, you look around a room like this, and it's full of extremely interesting and talented people, but the main challenge is that we all agree with one another. And I'm just coming from Abu Dhabi Finance Week, actually, this morning, and I was mentioning to some friends that I heard this talk there. The guy had like 450 people listening, and he was talking about the best investment opportunity is classic cars. And he was explaining, you have to buy at least a $250,000 car because it costs $20,000 a year to maintain them between maintenance and garage, and that's not including insurance. But he has 80 to 90 of them. Now, it could be good, I guess, for some people, but it's not divisible. It's not fungible. It's certainly not weightless. It has a huge maintenance burden. The self-driving element of Tesla and every other brand that's coming onto the market makes you wonder, will cars really even be around in 30 years? And you're sitting here contrasting that to the elements of Bitcoin, and when you go into an institutional investor meeting, sometimes it's like you're coming as a visitor from outer space. So I would like to encourage more of you extraterrestrials to reach out to the people that you know in the traditional finance community and talk to them about what you're seeing here and invite them here, because it's extremely compelling what we have and what we're building as a community. And it's worth, I think, inviting more people into this community to see it grow.
So I have to ask, Andrew, as a follow-on, were there any Bitcoin-related panels?
There was one guy from UBS who said that in 2021, central banks, tomorrow is the crypto fintech day, so I'm going to go back and we'll see what they say about Bitcoin. But today, there was a macroeconomist from UBS who said that in 2021, central banks concluded that the dollar was not safe and that fiat currency in general was not safe. And they also concluded that Bitcoin was not the answer. And that is why gold has been powering higher and higher and higher over the course of the last 5 years. And I just couldn't help but think how short-sighted this perspective really was, especially in an era where everything is becoming so much more digital.
And Peter, you had some experience in your past working in wealth management, working with clients, high net worth individuals. I guess from your perspective, how do we reach that group of people in terms of Bitcoin education? It sounds like that's really where we need to start. I know our panel's on Bitcoin treasuries, but it's still a lot of Bitcoin education that needs to happen out there. So it'd be great to hear your perspective on that.
You know, you have to realize that in order to understand Bitcoin, you have to spend that 250 hours to really dive deep and digest it. Now, most people don't have that attention span, and that's simply because they haven't felt the pain yet, right? So if you, like a lot of us, you're here because of Michael Saylor. Michael Saylor himself felt the pain back in 2020, 2021, when he was sitting on $500 million of dollars that was losing a lot of value. He felt that pain, right? And so with that pain gives you the motivation to want to study Bitcoin. So right now, people haven't really felt that pain yet, but they will, because of the dollar debasement that we just mentioned. And now something that we haven't talked about, which is artificial intelligence. So you have this double tsunami of dollar debasement with now probably historical levels of unemployment. You need to instill that fear in them because Bitcoin is probably the only financial moat for you to survive in the long run.
Go ahead.
I think that there's an element as well where companies can begin to think about how Bitcoin can help them be better versions of themselves. I mean, if Procter and Gamble bought 1,000 Bitcoin, it would be adding a powerful financial asset to its balance sheet, which over time would be poised to appreciate probably much more significantly than whatever share buyback they're doing. The same thing goes for virtually any S&P 500 company. And probably financing costs for Bitcoin right now are as high as they'll ever be. I mean, there may be some local moments where interest rates spike because there are real liquidity crunches. But if you zoom out, it's going to become less and less and less expensive to borrow against Bitcoin, especially if you're using structures that do have margin because it's so easy to liquidate the Bitcoin. I mean, there are very few lenders that have extended these loans that have actually experienced a credit loss because they set the liquidation levels at such a point where you don't have one. And so the interest rates are not a function of the risk. The interest rates are a function of the limited liquidity that exists within the market, but that liquidity is going up and up and up, and that's why interest rates have been coming down. Fast forward 5 years, 10 years, those rates are going to be lower and lower and lower. So if you put Bitcoin on the balance sheet today as a corporation, you're positioning yourself to compete better in your space. Whether you're a consumer products company or an industrial company or whatever it is that you are, you're going to be able to borrow more efficiently. Telling those kinds of direct implementations as the primary use case for traditional investors, I think, is just one example of meeting people where they are in terms of how they're evaluating the companies that they're looking at.
So in a way, it's a function of liquidity. It's a function of volatility. I guess from your perspective, Mason, leading Bitcoin strategy for a Bitcoin Treasury company, how do you go about those conversations with institutional allocators, institutional investors, and what role does a Bitcoin Treasury solve in potentially bridging that gap of getting Bitcoin exposure?
Yeah. I think what Bitcoin Treasury companies are doing essentially is making Bitcoin more appetizing to a wide range of participants in the market. For example, strategies, preferreds are they lower the volatility and hence the returns and the risk of Bitcoin and makes it more palatable to many different types of individuals, particularly institutions who maybe don't want the extreme volatility and hence perceived risk of Bitcoin at the moment. I think what we offer at Méliuz is, I think number one, you have to be comfortable with Bitcoin. If you're not comfortable with Bitcoin from an institution, or if an institution isn't comfortable with Bitcoin, then they're probably not going to be interested. So number one, it is a lot of education, which we are facilitating in the Brazilian market. And right now, it's a lot of, frankly, Bitcoin 101. What is Bitcoin? Why is it superior to other assets? Why should you use it as a unit of account? Once they fully, come around to Bitcoin and say, okay, this is something that we are potentially interested in, what we provide is a model that they're familiar with, a traditional business, cash flow. And I think intuitively, having a business that sweeps the cash flow into Bitcoin is something that they may be able to understand a little bit better than maybe the pure play strategies like Strategy, like Strive, like Metaplanet. I think all of those will do phenomenally well. And as the market understands them better, as the preferreds get seasoned, they will do great. But in the meantime, I do think there is a market of people and institutions who fundamentally don't understand it and have a way of thinking that that they've evaluated investments for a long time with, and we are matching that with our strategy.
So would you say adoption is gradual?
Adoption is very gradual.
I know we always hear gradual and suddenly, right? But I think we need to realize that with institutions and these pools of capital, it does take time, and we will eventually get there. But it's the process and the journey that matters. I want to talk about how growth looks like over the next 3 to 5 years in this space. Obviously, you have the pure play treasury companies. Digital credit has been a big theme during this conference, and what Michael Saylor has been communicating over the last week and a half or so of what they're doing with their prefs. Maybe Peter, starting with you, what does this space look like in the next 3 to 5 years? I know it's tough because Bitcoin changes. There's something always changing with the space seems like every 3 to 6 months. But yeah, maybe get your thoughts on kind of where we're headed.
So I always like to reference Jesse Meyer's Bitcoin valuation model that also Saylor uses. He mapped out that there's roughly $1 quadrillion worth of assets, which is 1,000 trillion. And just as a perspective, again, Bitcoin is only 2 trillion, so that's 0.2% of the entire investable asset base. And that number is going to change dramatically as more money printing is inevitably going to come. So, but with Bitcoin as the most pristine asset, there are such large pools of capital that as long as you are creative with your thinking, you can tap into any of them. But also, just as a general statement, Bitcoiners are very logical and analytical people, but they also assume that everybody else is logical and analytical. I say that because in order to really sell your product effectively, you need to think much more on the emotional level, the marketing, the distribution. Most people do not think about that. So that as a general statement, but specifically to what you asked about what type of financial products I can expect to appear in the next 3 to 5 years, I think a large pool of money is the commercial real estate industry, which Andrew is working on. And he can tell you about his products and how he's structuring these deals in combination with Bitcoin. That's very creative. And then another huge pool of capital is the retail investor space. You're already starting to see all of these large broker dealers, at least in America, opening up their investors to IBIT. But eventually, as these financial products mature, they're going to look for other things like what Andrew is building over at Battery.
I think in the next 3 to 5 years, what we will see is that there will be major winners in terms of the Bitcoin treasury companies that issue Bitcoin-backed debt through preferred securities in the jurisdictions that allow that to happen. And I think what we will see is the preferreds will get seasoned, institutions will keep on buying them, and they will propagate into the world. I think what we will also see is regular businesses that adopt Bitcoin as a unit of account as a way to shelter themselves from disruption. And I think there's 2 forms of disruption that are coming fierce and fast. I think it's monetary debasement. I think we will see a large amount of money printed in the next 3 to 5 years, and AI as well, which is going to disrupt business models. It's going to disrupt the world in ways that I don't think we can even conceive of yet.
I guess from your perspective, Andrew, obviously you've come up with some creative structure solutions of incorporating real estate and Bitcoin and putting it in a way where large pools of capital can get access to Bitcoin in a comfortable way or a way that they're used to. Maybe you could walk through that a little bit.
Well, I think that if you're asking a large institutional investor to take a standalone allocation to Bitcoin, you're asking them to do something totally new. And it has a lot of volatility. And that volatility does not necessarily match the investment committee process of a large institutional investor. You meet every quarter, you have 12 people and you're going to bring 12. Bitcoin's going to take all the oxygen from the room in terms of that discussion. And what if it goes up by 10x? Probably most investors will rebalance. What if it goes down by 50%? Probably most investors will trim their position and say we need to de-risk. When in fact, as everyone here knows, it's not so much timing the market as it is time in the market. And so our approach is to use Bitcoin as a tool to reshape and improve other asset classes that exist on institutional investor balance sheets right now. Credit in particular is in focus for me because from my own vantage, I think that inflation is the most significant risk facing institutional investors today. Because even though you get your money back over 3 years, 5 years, 7 years, when you get repaid the notional value of the debt, the real value is much lower. And that's a mask, that's an illusion. And with large institutional investors having 20, 30, in some instances more, % of their portfolio allocated to credit, that's onboarding a lot of risk. So what we're saying is, well, if you add some Bitcoin to credit structures, you can reshape that risk significantly. You can point away from higher risk credit with leverage, mezzanine, covenant light, industries that are not bankable. You can point toward higher quality credit, where although the returns may be somewhat lower, the returns per unit of risk are much higher. And if you add some Bitcoin on a tactical basis to those structures, and you share in the performance of the Bitcoin with the borrowers over time, you can create a much better alignment of outcomes, which not just protects against inflation, but actually outperforms inflation. And then you can say to a large institutional investor, we're not here to talk about a standalone allocation to Bitcoin. We're here to talk about how Bitcoin can be a tool to improve, protect, and defend your 30% allocation to credit. And that becomes a much more tangible and actionable way for an institutional investor to engage. And I think just building on that for 1 second, if you look at the whole digital credit space, it's very interesting and very inspiring. It's also a vision from the future. Because today, for rating agencies and for credit investors, everyone's focused on cash flow. What's the debt service coverage ratio? How much can you stress this particular asset and it can still afford the interest payment? But the digital credit model as it stands is about multiples of the amount that's been issued. And even if you did that with a mountain of gold, and you say, well, look, I have a mountain of gold. Don't you agree that I can issue this small amount of debt against it and I can sell some of my gold to support it? Still, the rating agencies would have an issue because there's no income. It's not so much the Bitcoin, it's the lack of income. And I think that as we as an industry are seeking to make the case to large allocators, especially credit allocators, that they should integrate Bitcoin into their way of thinking, we should not lose sight of the extremely fundamental element of an income cover on credit and how that can support an interest rate. You can get the Bitcoin upside through alignment of interest, sharing long-term performance, but I think we need to widen the aperture of what digital credit really is.
That's a great summation of that. Great overview. You know, I was in a meeting with a family office about 2 weeks ago, and we've gotten this question several times at UTXO. You know, and they said to me, I can't invest in Bitcoin because I don't know what the utility is. And so I know we talked a little bit about this last week, but I guess what does utility for Bitcoin look like outside of store value?
I mean, So we all know like the actual merits of Bitcoin. It is non-correlated. It's while high volatility, also asymmetrically skewed to the upside because of the 21 million hard cap. And so I love what Andrew said in the regards that you have to know what institutions want and then make it palatable to them without having them to immediately buy pure Bitcoin and to hodl through volatility, right? So it's like what Andrew's providing is that bridge, if you will, while still, orange pilling them through a longer cycle without having to be like, nothing about Bitcoin, and all of a sudden I'm allocating 5% of my portfolio to Bitcoin. Like that's not reasonable expectation. You have to do it in a very sophisticated, structured way. And I think Andrew's leading the cause on that.
I kind of reject this question because I think store of value is the ultimate utility, and I think it's the most important utility that a human needs is to store their time and energy in an abstracted form, in a modern society which requires trade. I just don't. I just kind of reject that.
Yeah,
question.
well, and it's interesting because these are the questions that are coming up from very sophisticated investors, right? Because everything from an investment standpoint has some sort of utility, right? But obviously, Bitcoin's the apex.
I think when we live in a world of broken money, and I think what investors know intuitively is that in order to save their energy, in order to save their time, they need to take their currency and put it into something that will store value, aka an asset. And when you show them money in a world of broken money, true money, they're completely blind to it because they've never seen it.
Bitcoin is a very dynamic instrument. The total addressable market for store of value is 8 billion people on Earth. It applies to every individual, every family, every company, every country, every institution. It's extremely important, as Mason said, to save your capital across time and space. But here in Abu Dhabi, we can take inspiration from the fact that the United Arab Emirates is already using Bitcoin mining to balance the energy grid. Because, of course, in the summer, it's very hot. There's a lot of air conditioning. In the winter, like today, it's very pleasant. It's delightful. You don't need as much energy. That extra energy, instead of mothballing the power plants, is being used to hash Bitcoin. The same thing is happening today in Tennessee, Texas, and Tokyo. And it's not just energy management. It's faster payments. It's novel SATs streaming and the engagement of financial transactions in more fluid ways. Saving money for payments. It's remittances that are traveling over the world. It's human rights money, as Alex Gladstein helps us to understand. It's so many different things that have yet to be even conceived that the main challenge for everyone in this room is to imagine the future using Bitcoin, because it's very dynamic, very malleable, very useful properties that can be applied to almost any industry. So I just couldn't be more excited to think about what everyone here is going to develop over the coming months and years.
I think that's a great place to end it. Please thank our panelists here today, Andrew, Mason, and Peter.